Stocks perk up on hope of some forward movement on resolving tariff issues, even as calls for domestic reforms rise. Realty, industrials and power are key gainers, while domestic consumer durables and FMCG drag.
In a significant relief for oil marketers, the government has agreed to allocate 30,000 crores payable over FY26 and FY27 to partly compensate them for their over 40,000 crores in under-recoveries. The stocks perk up on the news.
Tata Motors takes a hit on the US tariffs and expects an impact of 500 to 600 million euro in FY26, but an easing to a 300 to 400 million thereafter, even as it holds on to its FY26 guidance for JLR. An undemanding valuation supports the stock.
PG Electroplast tells CNBC-TV18 they were operating at over 100% capacity till early June with strong orders on hand before demand fell off a cliff, catching them off guard. And while inventory remains a big issue for now, the company argues the future trajectory won't be altered by one bad season.
ICICI Bank tilts its focus towards high-income, high-net-worth customers by upping the minimum account balance in saving accounts for all new customers from August 1. Experts express concerns over the medium-term impact, even as several savers ban the move.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a session where we're just about consolidating with a positive bias at this point in time. So we've started in the green. Let's see whether we manage to end that way, considering that it's been 6 weeks of weekly losses that we've seen for the market. So maybe this week will be lucky. And remember, it is also a holiday shortened week. So maybe some luck in the next 4 days. But nonetheless, for the markets, it seems to be a lot about specific stocks in today's trading session. May it be Tata Motors, may it be ICICI Bank or PG Electroplast, it is about specific stocks. And when you're talking about earnings today, a lot of focus in terms of the broader market numbers, because that seems to be where the crux of the numbers would be from. So the likes of Grasim Industries to Ipca Laboratories and a couple of others such as even Krishna Diagnostics and BML. So that'll really take focus or center stage probably in the second half of the trading session. Hi, Mangalam.
Hi, Ekta. A lot of individual stocks on our radar. Maybe the early bird gets the worm for the market. And let's see whether the going continues to be as smooth. The early signs so far, the first half of trade, we've seen some decline from the highs. So for the Nifty, it's important to go ahead and cross that 24,500 mark. We've seen a big spike in India VIX as well, so we'll watch out for that. And there is that tug of war which is taking place in the advanced decline ratio. For a large part of today's trading session, we had, the green line above the red line. And now, just the last 15 minutes or so, the red line has claimed its superiority over that one back. But then again, who's to say? It's right in the middle, split right down the middle for 1,400 stocks in the green, red for about 1,300 stocks in the green. Among the stocks which are in the green right now, Adani Group, causes a notable mention. It's up 4.5% for Adani. And if you look at Adani Ports as well, that's doing well. Remember, these stocks were fairly well sold on Friday's trading session. So now seeing a bit of a pickup once again. And if you pull up something like an Adani Total Gas as well, that's seeing some purchase. The stock has moved to the higher end of today's trading range. But it's the oil marketing companies which are doing a lot better in today's trading session as compared to the other parts of the markets. This as the government has agreed to allocate 30,000 crore rupees as payable over this financial year and the next financial year to partly compensate them for their over 40,000 crore rupee under recoveries. Stocks mildly higher, though off morning highs. Sonal joins in on the news. Sonal.
Well, thank you for that. It is a big news that has come by, and the street was waiting for this for a long time. That is the 30,000 crore rupee compensation that these companies have received in form of LPG subsidies. Now, do remember they have under recoveries to the tune of 41,300 crore rupees till June 2025. So only a part of it is what they have received. What we don't know whether this is a one-time compensation or whether there will be more tranches of this compensation that will be given to these companies as well. Nevertheless, brokerages, they are quite positive on this one. Jefferies says they estimate an upside of 29 to 42% on EBITDA for FY26. In terms of profits, it will be around 38 to 70%. But this is only when they get the entire compensation in FY26. They will be paid in tranches. We don't know whether all these tranches will take place in FY26 itself. ICICI Securities says that LPG compensation is a material boost to their earnings. It takes away the margin worries for FY26 as well. Morgan Stanley, they prefer HPCL and BPCL. They say subsidy could boost FY25 earnings by 75%. Deleverage their balance sheets by 12% and support a consistent return on capital employed to the tune of 14 to 15%. There could be a downside if fuel prices are cut by 1 to 2 rupees per litre on the marketing side, but that's a limited downside that they talk about. UBS says that the payment that they are receiving right now is equal to 75% of FY25 dues and 62% of the dues which are accumulated till June 2025. So that's around 62%. It is equivalent to 8 to 16% of their book values for all these three stocks for FY25 and is equivalent to 6 to 9% of current market capitalization as well. So yes, it's a relief, but a lot depends on what's happening with crude sourcing as well. Maybe that's the reason the stock are not reacting as positively as it was expected. But nevertheless, it is a positive news that has come by for the entire sector.
Okay, all right. Thanks very much for that, Sonal. Well, yes, definitely positive news coming in there for the OMCs or the oil marketing companies. But let's talk about Grasim now, which is in focus as the company reports an improved performance in the quarter gone by. Nigel is here with the earnings fine print. Nigel, over to you.
Well, that's right. Grasim has reported an improved performance in the first quarter itself. And you look at the absolute number on a year-on-year basis, there's an improvement out there. And the margins, for the standalone business as well have improved on a sequential basis. Quarter 4 FY25 seems to have been a bit of a bottom year. And from there, we are seeing some improvement in margins from around 2.5%. It's holding at around 4.7%. And what drove this improvement? Well, the chemicals business. That clearly has seen a big improvement. So the chemicals business, EBITDA, has now clocked more than 400 crores. That compares with around 300 crores on a year-on-year basis as well as on a sequential basis. While the fibers business as well has done some kind of improvement, particularly on a sequential basis. So chemicals business improving, that's what's led the way. Besides that, the newer businesses, paints as well as B2B, that are clocking more than 1,000 crores a piece now on a quarterly run rate. The losses out there have come down. So from around 350 crores of EBITDA losses, that's down to around 300 crores. And both these two are scaling up rather well. Brokerages, well, they're quite enthused with regard to these numbers. Jefferies, they retain their buy rating. They've gone ahead. They've increased the target price to around 3,500 rupees. They say that scaling up of the new business, that's the key trigger with regard to the valuation re-rating. Motilal Oswal, they as well have gone ahead. They've increased their target price to around, the 3,500 or thereabouts. They have raised their EBITDA estimates as well because the first quarter's numbers were quite good. So that's why they've tinkered with that. They point out that the holding company discount is at around 41% and the average of the last 3 years is close to around 37%. So that holding company discount as well a little bit higher. Nuvama, they retain their hold rating, but they've increased the target price to 2,971. They increased their FY26 EBITDA estimates by around 20% because of the beat that we have seen in the first quarter. The reasons are they feel that Grasim is a value buy. The global VSF cycle, well, that's near the bottom, which, they are pointing out. And also they say there's potential long-term value, particularly in the paint segment. So the numbers, standalone numbers look quite good, particularly with regard to the chemicals business. The losses in the newer businesses, that's B2B as well as paints coming down. Brokerages upping the estimates for this year. And that's why the stock holding higher in today's session.
All right, Nigel, thanks a lot for that. That's about Grasim. With that, let's talk about Tata Motors. That's the one which is buzzing in trade as well. The company's first quarter performance meets estimates while management holds on to its FY26 guidance for Jaguar Land Rover. Undemanding valuations also support the stock. Rima joins in with a fine print.
Thank you. Let's first go through the numbers. Now, Q1 consolidated revenue was down 3%. EBITDA was down 35% with margins coming in at 9.3%. And that led to a drop of 35% in the profitability. But large part of the impact of the weakness in Q1 was linked to the tariffs. If you strip that out, analysts say numbers were largely in line. The management commentary on JLR then. Healthy demand in the US, stable in UK, but EU and China is still subdued. They also quantified the tariff impact, 500 to 600 million pounds this year, and thereafter that, 300 to 400 million pounds. what the analysts point out is that despite a weak Q1, the company still holds on to its JLR EBIT margin guidance for FY26 at 5 to 7%. So that is reason number one, for the up move today. Secondly, as you pointed out, the stock has already corrected. It's down 12.5% year to date. From its 52-week high, the stock has fallen 43%. So perhaps a lot of the bad news could be in the price. And thirdly, valuations. Now, Nomura says valuations are currently at 4.6 times forward multiple in terms of EV to EBITDA, which they say is undemanding but fairly, fair considering all the risks. And lastly, the street is looking ahead to what the festive season holds and whether we are going to see an improvement in the domestic sales. Back to you.
Okay, all right, Rima, thanks very much for that. So that's Tata Motors, that stock up around 2.5% at this point. And for the markets as well, just about holding with a gain of around 0.2% or 0.3% currently for the Nifty. And the advanced decline ratio is absolutely even keel. We have around 2,000 stocks advancing for around 2,000 stocks declining. So just split down the middle when it comes to the advances and declines in the broader markets. We'll take a short break on that note, but on the other side, we'll connect with the management of Medicure to discuss the quarter gone by. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18 this Monday afternoon. Let's talk about one specific company now. Medicure, which is basically a medical device manufacturer, reported what was a tepid Q1 performance with muted revenue growth of around 5% and margins coming under pressure. The company has reduced their international business growth guidance to 5 to 10% versus 12 to 15%. And are expecting higher R&D costs, but are bullish on the domestic business. Himanshu Bed, the MD of Medicure, now joins in to discuss more. Mr. Bed, thank you very much for taking the time out. But let's talk about the international business to start with. You've reduced your guidance there. You're expecting around 5 to 10%. Europe was weak this time. Just tell us what took place in Europe, because we understand your infusion therapy segment was impacted the most.
See, I think our core business has been infusion therapy in Europe. And I think due to, certain overstocking by European suppliers, and I think inventory reduction was also one of the core reasons. Because of this tariff issue globally, I think most of our customers were working on reduced inventory. But I think what I've also mentioned in our call earlier, that, now the market is bouncing back. The customers are now, placing more orders. So I think things are going to normalize, but we have lost one quarter, and probably that is going to impact us.
Which is what what we wanted to understand in terms of your overall projections for this year. Because I remember, Mr. Bed, when you joined us earlier, you had said this year's overall revenue would be upwards of 20%, led by domestic, which is 25 to 30%, and exports, which is 15 to 18%. So on the back of this lost first quarter, would you revise your guidance for this year?
See, for domestic business, our guidance still remains around 30%. So I think, and that's 1/3 of the revenue. So almost 10% growth comes from there. And I think export business, that's 2/3 of the business. So our guidance is between 5 to 10%. I think we should hit the upper deck. I think things are now changing rapidly now in Europe for us. So a lot of new approvals have come in. Actually, we got a lot of our products MDR certified only in June this year. So I think that was also kind of a laggard. So that is also changing a bit now. So I think we should hit the upper deck at 10%, I think.
All right. I just wanted more details with regards to the US business, because that's, a small percentage in terms of sales. In fact, you can quantify it for us.
Yeah.
And what is your reading in terms of, this 50% tariff and how it could impact a company such as yours, which is doing business with the US? And in fact, I think you have 2 CDMO contracts come up, which are also focused on the US. So how does this play out?
See, I think, we were okay with the 25% tariff because we were very competitive as compared to our neighboring countries like Vietnam, China, or maybe Malaysia. But I think 50% keeps us a little bit away from the US market because of the cost reasons. We don't know what is going to happen, but I think, for certain products, we are still going to move forward because we haven't seen anything from our customers so far, because it's a pretty fresh thing right now. But it is going to impact if it's going to stay around 50% level. So that is the worry right now. within the company. But as US business is still very low, it's close to around 2.5% of the total business even this year. So we're not overall worried with the US tariffs. But I think next year and year forward, I think we have a lot coming from the US. So I think that will be a little worrisome.
All right. So, that is something that we will definitely monitor. Currently, just 2.5%. Next year, a lot more comes in from the US. We'll talk about next year in just a bit. Yeah. But just to speak about FY26 once again, you said exports should grow between 5 to 10%, the upper deck of that. Yeah. So that's about 10%. That's two-thirds of your business. Yeah. Domestic grows at 30%, which is 1/3 of your business. Yeah. So if I do a weighted average, this year you grow at 10% on your top line. That's nearly half of what we thought in at the start of this year.
The weighted average will be Mangla will be close to around 16%.
Got it. So that's 16%, and that grows around 4 or 5 percentage points lower than what you had earlier accounted for.
That's correct. That's correct. Absolutely.
And margins between 25 to 27%, that guidance stays?
We should be, because in fact, you see, Q1, the gross margins have improved by 150 pips. So I think on the margin side, we are very comfortable. I think we should be close to 26.7%. I think we are pretty much okay with that number right now.
Okay.
So we are comfortable there.
Okay, your guidance on margins is 26 to 27%, though you're hiking your R&D costs to focus on newer segments, I understand.
Yeah, that's correct.
Okay. Your renal business is doing very well. Are we now talking about the exports reducing significantly when it comes to high-end medical devices in India, and companies such as yours are now being substituted by the larger companies, the Siemens of the world, etc.?
So I'll tell you, in certain categories now, Indian companies are starting doing well. Let's say orthopedic implants is one of the categories where India is now using 50% locally made, let's say knees or hip implants. In cardiology, even stents, if you see, around 70% is now locally made products being used in the country. So in many categories, we are achieving a higher local content, local consumption compared to foreign made devices. So that's a very welcome sign. And I think even after COVID, if you see, almost 2,500 new factories have come up for medical devices, or new licenses have been granted for medical devices across medical device parks and across different parts of the country. So I think the industry seems to be quite positive and promising. And I think government has done a lot actually in last 4 or 5 years. So I think we continue to get that support. I think we'll get the self-reliance very soon on medtech industry. I think
so.
What 5 to 7 years away.
What are you guiding for? I have an additional question actually on that before I get to your guidance. Yeah. What do you think that Indian companies could become net exporters when it comes to high-end medical devices?
Yes, and I think if you see large companies like GE, Siemens, and Philips, and many others have started manufacturing in the country. And a lot of high-end equipment we were importing earlier is now getting manufactured in the country. So currently the ratio is still a little skewed. It is 8 billion of imports and 4 billion of exports. But if you add local manufacturing, we are at par. So 4 billion local manufactured, locally consumed. So industry size around 16 billion. So I think in next 3, 4, 5 years, I think maybe 5 years, we'll be exporting more than importing in the country.
Wow. That's music to our ears, definitely, for the medical device community. But Mr. Bed, before we let you go, then can give us a concentrated guidance in terms of the renal business. How many dialysis machines do you think that you can probably install in FY26 and maybe extrapolate it for FY27 as well? And tell us about the cardiology and the critical care business as well. What is the growth estimate for both those segments? Let's start with the renal business.
So for renal, I think this year we have guided for 600 to 700 machines. In the first 4 months, we already installed 130 odd machines. And, as we see the year, we should hit that 500 to 600 number easily. Next year, our target is to install close to 700 to 800 machines. Indian market is probably around 5,000 machines per year. And that's the run rate today. So overall, 50,000 machines are installed in the country, which has an average life of 10 years. And so that's where we are guiding today. So we should have around 12 to 15% market share by end of next year, at least for the machine business. And on the consumable side, we should already do over 15% by end of next year. That's the plan. On the cardiology side, we have just launched the product this year. So we will be implanting around close to 20,000 stents this year. and a lot of other consumables which we already started manufacturing, and most of them are import substitute products. And so next year, number could go up to around 50,000 plus stents. And Indian market for stents is close to around 15 lakh stents today.
And what does this mean in terms of revenue? 500 to 600 dialysis machines this year and 20,000 stents this year. And for the next year, 700 to 800 machines and, 50,000 plus stents?
So for dialysis business, we have guided for a revenue of around 50% increase from last year, 150 crores to around 50% increase in FY26. And FY27 also, I think we should be close to around 40-45%. That's the number we have in our mind. And for cardiology business, it's just a start. So, numbers are very small right now, but this year itself, we will do close to 25 crores. Going forward, next year could be 100% growth to around 50 plus crores.
And critical care?
Critical care has also started, only early last year, we started critical care. And critical care is more focused toward oncology side, again, import-driven business. So again, in that area, we should do close to 25-30 crores this year and next year around close to 50 crores.
All right, take that point. Thanks a lot, Himanshu, as always, for joining in and giving us your views on the growth in the devices market for the country and for yourself itself. Because of the lost first quarter, you've seen a decline in your overall guidance for this year. You believe growth can come back in the remaining 3 quarters rather. With that, we'll step into a short break. And as we do that, let's get you some good news. All you viewers, CNBC-TV18, which is India's business news leader, is now just a click away via the all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. You can download the app from either the Apple Store or the Google Play Store, or just scan that QR code, which is up for you on the screen. Welcome back. Even as the markets continue to hold on to those gains that we saw from the morning, even as we're off the day's high, a lot of the broader market stocks are buzzing around. The market's making another attempt at the higher end of today's trading range so far. So let's go across to Vivek, who has the list of all those stocks which are moving and shaking. Vivek.
Well, thank you so much for that. Well, a brief hint of recovery as far as the broader end of the markets are concerned, and that is what we are witnessing. Quite a few buzzers in the session today. First on the list, as far as the broader end of the markets are concerned, has to be DOMS. Sequential recovery seen year on year, still a muted set, but despite that, markets like this particular set of numbers are high by 11% on good volumes today. The other stock is HPL Engineering, earlier known as HPL Power Systems. Very good set of numbers. It's the top NSE 500 gainer. Very strong growth seen as far as the EBITDA margins are concerned. Street clearly likes this particular set of numbers. Home First Finance, we had intimated to you last evening that there could be a large block that could happen in today's trading session. We understand from our sources that Warburg is the likely seller in the session, and the overhang now is done away with. Back of that, there's been a big recovery in the stock from the intraday lows. And keep an eye out on data patterns as well. Now, even though the company actually delivered a muted set of numbers, across all parameters, guidance has been retained, and that has led to quite a bit of a recovery as far as the stock is concerned in the trading session today. But on the other hand, quite a few stocks that are seeing selling pressure. The first on the list has to be the one that made the news all through the second half of Friday, and that is PG Electroplast. You saw almost 25% downtake. Today, again, 17%, and not too much recovery from the intraday lows. Along with that, Voltas, remember, delivered its results over the weekend. Again, muted set of numbers. Similar space, consumer durables continue to be quite weak. And on the back of that, almost 6% low as far as Voltas is concerned. Along with that, key worry being the market share loss that the company has seen. Container Corporation, now this particular stock, very weak set of results. Q1 is something that the company did see, significant amount of pressure as far as volumes are concerned. While the management has retained the guidance, there has been significant selling pressure post Q1. Another down day as far as Concor is concerned. And Equita Small Finance Bank, NII, PPOP, all of them falling. Along with that, asset quality pressures. That stock in the broad end of the market is down over 6% today.
Okay, all right, Vivek. Thanks very much for that. Well, ICICI Bank is the big stock in focus. It's raised the minimum account balance in savings account for all new customers from the 1st of August. RBI Governor Sanjay Malhotra says it is up to the banks to decide on the minimum balance and it is not under any regulatory domain. Listen in.
ये जो मिनिमम बैलेंस की जो बात है, जो मिनिमम बैलेंस का जो आप बात कर रहे हो, वो उसके अंदर में रिजर्व बैंक ने सभी बैंकों के ऊपर में छोड़ा है कि वो किस प्रकार का मिनिमम बैलेंस वो रखना चाहते हैं। तो अब किसी बैंक ने 10,000 रखा है, किसी ने 2,000, कईयों ने माफ़ भी किया हुआ है, लेकिन ये रेगुलेटरी डोमेन में नहीं है।
All right, that's what the RBI governor has said, that they have given a freedom to the banks to go ahead and decide those limits. So it's not part of the regulatory framework. So we'll watch out for how this moves from here on. But as of now, the stock under pressure at a time when the Nifty bank is up 159 points. We have ICICI Bank, which is actually at the low point of today's trading session. Sudeep Shah of SBI Securities joins in with some trading strategies after this short break.
Welcome back. Well, stable for the markets. We have the Bank Nifty, which is up around 0.3%. Just watch out for State Bank of India because it is reacting positively post the commentary from the management numbers on Friday. So that stock is up around 2% and year to date, it's now given returns of around 3.2%. But Mangalam standing by at the wall with an F&O update for this Monday. Mangalam, over to you.
Well, the market's pulled back. It has been falling for the last 6 weeks. So it was only imperative that the Nifty actually goes higher in the morning. The question is, where does it go from here on? Because on the one hand, while the market's moved higher, secondly, it's also seen some bit of supply at higher levels and advanced decline. They are jostling for space between, the red and green lines. Currently, the red one slightly above the green one, even as we have, an almost equal number of stocks which are advancing. And the second part is typically when the market moves higher, bulls would like the India VIX go lower. That speaks about, a put selling. But this time around, maybe that's not the case. The India VIX is higher, so that tells you we're probably not out of the woods, even if we have seen a bit of a relief rally. The technical analysts would say that, the Nifty has to, for instance, sustain above these levels, cross the 100-day moving average at 24,494. And for that to happen, the Nifty Bank has to stay above the 100-day moving average. So what is the resistance for the Nifty Bank is actually, for the Nifty is actually a support for the Nifty Bank. All of this means one thing. The next leg of recovery rests on the IT index. The intraday chart of the IT index comes up for you. For most part of today's trading session, it was in the red. Thereafter, it moved higher and currently at the high point of trade. So if that continues to do well, maybe we see a further up move on the frontline index itself. The earlier oversold levels are now taken out. The Nifty put-call ratio is at 0.8, telling you that there has been some put writing at lower levels at 24,400 and 24,350. Which means that maybe Friday's and the previous trading sessions lows of around 24,350 thereabouts will continue to hold on, but it has to cross the higher levels, which hasn't been witnessed right now. In fact, the 24,500 call writers are still equally active and they're holding on to their short positions, in fact, adding more to that. So the 24,500 call comes up for you. 1.5 crore shares in open interest out there, 43 lakh of which have been added just today. A premium of 100 rupees telling you upwards of 24,600 will continue to see supply for the markets. A lot of individual stocks on our radar. Consumer discretionary stands out on the way down. Amber and Blue Star have both seen a lot of selling in index futures, so a lot of fresh shorts built out there. And I'm watching out for PG Electroplast. The stock is down nearly 40% this month. Will most definitely enter F&O band today with the kind of open interest surge that we've seen on the stock. It's actually crossed way past the 95% mark of market-wide position limits, after which a stock enters F&O ban.
Okay, all right, Mangalam. Well, that's on the F&O space. Sudeep Shah now joins in to discuss the technicals of the market. Sudeep, hi, welcome to the show. Well, we are, trading in positive terrain, but do you think that's enough? What's your call on the stocks and as well as the Nifty?
Good afternoon, Ekta. Ekta, yes, after 6 continuous weeks of downtrend, we've seen some kind of a better Monday morning. But what I feel is that even if you look at stocks, you're not seeing that bigger recovery. So for me, it is important that when I'm seeing at the charts of Nifty, 24,530, 24,550 now needs to be taken out on a closing basis. So until and unless that does not happen, there are always chances that you see bouts of selling pressure from higher levels, and once again a retest of 24,350, 24,370 could be possible. This from an intraday perspective. Overall, from a positional perspective, 24,200, 24,180 zone where the 200-day exponential moving average is there seems to be a very strong support, a potent support here. So I feel 24,200 needs to be that line of defense that bulls have to watch out for. On the upside, 24,530 needs to cross and indices need to sustain above that.
All right, Sudeep, and individual stocks, how would you look at trading them?
See, there are a couple of stocks from the mid-cap space now. The first one is Affle India. Here we have seen some kind of a decent breakout post some consolidation, and the prior trend over the last several months have been quite positive. So we feel that this could be bought with a stop loss at 1940 on the downside and a target of 2100 on the upside. And the second stock is Policy Bazaar. Here also we post some consolidation. There is a breakout that is visible. The stock has taken support at its 200-day moving average, which is closer to 1750. Over the last 2 to 3 weeks, the stock has been taking support at that zone. And today we are seeing a breakout, a short-term breakout. And overall, we feel that the stock could do 1930, 1950 on the upside. And this can be bought with a stop loss at 1775 on the downside.
Okay, all right. We're going to leave it on that note, Sudeep. Thanks very much for joining in and taking us through all the technical calls. We'll take a short break now, but up next, Manisha Gupta will join in. She has with her an Agri expert, Rajesh Paharia. Stay tuned.
Welcome back. Joining us on the show now is Agri expert Rajesh Paharia. Mr. Paharia, thank you so much for joining in. I want to focus on rice with you because when you look at the international markets, we've seen the prices continue to decline. We are looking at a very strong crop, not just in India, but in Vietnam and Thailand as well. And if you look at the rice futures on the screen, it's trading at an 8-year lows right now. I will come to the US tariff concerns later on. But with the way the international rice prices continue to decline, would you say it's becoming a problem now for the rice exporters?
Good afternoon, Manisha ji. It is going to be a problematic as the supply and demand has been a great mismatch at the moment because of the overproduction in our Asian countries. The places like Thailand and Vietnam has been swapping their positions of being the largest exporter. Number 2 has become number 3 and number 3 has become number 2. So there has been an interchange, and parallelly, India also is going to give an additional 5 million ton of paddy production, which will be again a chaotic situation. The demand from the West African market is not rising, and that is going to be a catch again. In case if the demand is not being stable, what we are going to do with this rice for at least 1.5 years, it will be a very, very problematic. Manisha ji.
Mr. Paharia, what we have seen within, for rice, within Indian markets, of course, has been PDS for one, and then, of course, broken rice going in for ethanol the other. But even with these deployments, we still are sitting on a very huge surplus, would you say?
See, overall, what the buffer norms, which has been redefined by the Food Corporation of India very recently, even though we are almost 216% higher than what the buffer norms are. So even if the PDS is being offloaded, it will not be consumed as what the availability of the other premium varieties are available in the domestic market. Our food habit has also developed in India. The people who were consuming the FCI quality of rice, now they have shifted to a better grade like Basmati, Dubar, Tibar, and even the semi-premium Basmatis like Sona Masuri and Samba and others. So I don't feel that there will be an additional demand coming in, despite if the prices has been reduced by FCI. A lot of offtake methods has been taken up by FCI, wherein they have been allocating to ethanol at 22.50. I'm surprised in last 2 tenders, there has been a nil participation by the ethanol takers, and even at 22.50, 100% broken. Apart from that, only a part of the cargo was sold in Delhi and in Assam through the tendering process, because still they feel the prices which has been offered are very high.
Really. Mr. Paharia, also, what's your sense for the Indian prices now? Because, yes, there's a lot of disparity when you look at the rice within the Indian markets also. With the global futures now trading at an 8-year lows, what is your sense on where the rice prices could be headed for India?
When we all go with the sentiments, like in case if it is a bearish moment at the moment, Everyone in the African market who were talking about 385, they've started talking about 360. Now they have been asking at 340 levels because we have to compete with Thailand, Vietnam, Myanmar. So in case if the prices are correcting, I'm 100% confident India has to match up with that. And then accordingly, the cargo will be coming and it will be being sold. We have an high estimates of making the target of exports, which our Honorable Minister Piyush Goyal ji has said that 22 million has to be 25 million ton this year. So we need the support of the government to subsidize, to increase some subsidies for the exporters. Then only we'll be able to achieve that number.
Mr. Paria, while the target is 22 and 25 million tons, what's your sense? What have we done till time this year?
So far, so good. If the things get supported in the similar fashion, we have almost completed around 4 million ton. So the next season is on. So the pace will be taking up accordingly. But parallelly, we have threat and competitors like Pakistan, Vietnam and Thailand who are also going to offer the similar quantities. So in case if they come into the picture and the government of India supports, definitely 22 million ton, it will be easily achieved.
Mr. Paria, what's your also sense with the US tariffs with 25% in place, 50% from 27th of August perhaps? What kind of deals or what kind of negotiations really are happening with the US counterparts?
Manisha ji, last time also when we have spoken on this subject, as I told you, that around 650,000 ton is being exported to US market, combining both basmati and semi-premium basmati, non-basmati rice. So even if whatever the 50% tariff has been there, it is an essential commodity. Like they have, US has been kind enough to give the grant to gold imports. So definitely our ministers and the entire diplomatic battery is working on that rice or the food commodities should be exempted at least. So certainly we have to just wait and watch because this 25 plus 25%, we become out of the market at the moment.
All right, Manisha.
Okay, all right, Manisha. Thanks very much for that and taking us through that conversation. Well, we need to take a break with a small reminder for our viewers that unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. The Nifty is now moving higher, 115 points higher on the frontline index, even as the Nifty Bank is just about 250 points higher. So we're closer to the higher end of today's trading range. And a large part of that could be attributed, as we spoke about earlier, to the Nifty IT, which had moved to the high point of trade. And that continues to do well. The other big, contributor to the Nifty on the way up right now is L&T. So pull up the intraday chart of L&T and you would see that stock too has, spiked and is contributing to the Nifty. Just watch out for Yatra, because the company reported its numbers over the weekend, in fact, Friday last late evening, and it's a very stellar set of numbers. On a low base, we've seen a near doubling of the company's revenue, and as a result of which, the EBITDA of the company has moved almost 400%. So from 4.5 crores, it's jumped all the way up to 23 crores. So that's the nature of these businesses. A small change in the amount that they charge per ticket or the realization per ticket and hotel packages, etc. on that volume brings a big amount of change in their overall performance. The net profit too, on a low base as a result of this, has seen a big surge of nearly 300% from 4 crore all the way up to 16 crore. If you look at the internals, gross bookings were up just 9%, which was understandable given the travel sector this time around in the first quarter faced a fair amount of disruptions. For the company, the hotel packages business, as well as the meetings, events and investor conferences, etc., did well for them. Add to all of that, they added more corporates as well, nearly 34 new corporates that they added this quarter, and this company has been the go-to travel partner for a lot of corporates, so that does well for their overall realizations. And if you look at their gross margins too, that saw an improvement across all their segments, the air travel segment as well as the hotel segment year on year. Doing well for Yatra.com or Yatra Online and doing well for the markets. With that, we'll wrap up on this edition of Halftime Report. You stay tuned to CNBC TV18 as Business Lunch comes up next.